This video will be the ultimate guide to the EdgeFinder Pro. We're going to talk about what the EdgeFinder is, who this tool is for, why you should care about a tool like this, and how it functions to generate trading ideas in the financial markets and to simplify fundamental analysis. Now, before we get diving into all of the different features of the tool, I want to show you something very important. My team and I have created this tool over the last few years and gotten it to a point where it is a very robust and professional level trading software tool. But I also find it very important that if we're going to be discussing the utility of a tool like this and the ideas behind it, I want you to understand that it is being built and led by a person who is a profitable trader themselves. And I'm gonna log in right now to my personal trading account that I have grown over the years here. What you can see on the screen is that this account is up $279,000 in the last few years. This is one of my trading accounts. It is not the only trading account that I have. The reason I show you this is because I want you to know that if you're looking to incorporate fundamental analysis, it is not a waste of time. It is not a meaningless thing that you can spend countless hours in. It is a real thing, and it has led me to making a lot of money in the financial markets. So without further ado, let's jump into the EdgeFinder. Now, before we get into all of the different metrics and tools and how the algorithm works on the EdgeFinder, I want to discuss briefly just a little bit of the high level what this tool actually is. First thing you'll notice is that this is actually a tool that is browser based. So once you get your copy of the EdgeFinder, this is something that you just log into on the internet, and you can access it from your mobile device, from your tablet, or directly from your browser. I should also mention that if you have a license of the EdgeFinder, you don't need to buy multiple to have multiple devices logged in. You just need to have your account verified and have your email attached to this. So let's get into a little bit of what this tool is from a very high level. You'll notice that I've selected a tab here on the left, the top setups page. Now, the reason I've selected this page is because in my opinion, it is the most important page on the EdgeFinder itself. The top setups page allows traders to see all of the different markets that the EdgeFinder is tracking per se and generating bullish or bearish outputs on each chart. So if you're somebody who watches gold or Bitcoin or the DAX, the Dow, the S&P 500, currency pairs like USD crosses, or even minor currency pairs, what you'll notice under this category selection is that the EdgeFinder is tracking a ton of different types of markets. This is not a tool that is built just for Forex traders or just for futures traders. This tool is built for a very wide basket of different types of traders. Over the years, we've even added some crypto with Bitcoin's inclusion in the EdgeFinder's algorithm, as well as many other unique commodities and even minor commodities per se, things like copper and platinum, etc. If we go over to metals, we had a metals update recently where you can see we're tracking some metal readings as well: gold, silver, platinum, and copper. So what you'll see looking at this page is you have lots of different red colors and blue colors, and you have this bias and score column on the left. So the way to read this score column is that a higher score means that more variables that the EdgeFinder is tracking are indicating a bullish reading for an asset than bearish. The same could be said if we flipped it around and looked at the most bearish categories. What this would signal is that most of our categories here, most of our columns, are indicating a bearish bias for the underlying chart. And to break these columns into categories, we've got our sentiment readings, which are the commitment of traders data, which we'll discuss in a little bit, our retail positioning. Seasonality is on the technical side, so we look at seasonal trends in the EdgeFinder's output. We look at the overall momentum or technical price action trend to give us a bullish or bearish reading. Then we look at several economic data statistics: GDP, manufacturing PMIs, services PMIs, retail sales, inflation readings, employment change, unemployment rate, and interest rates. And don't worry if you don't know fully what each of these things means. If you watch the video in its entirety, or you can skip ahead to the parts where we discuss each one of these things, you can get a full comprehensive understanding of not only what these things are, but how the EdgeFinder uses their data points to help contribute positive or negative scores to each of your favorite charts. Before we go into some of the individual components, let's just talk about what sentiment is for a second. Sentiment in the markets is what we refer to as things like tracking what institutional money is buying or selling, or tracking what the crowd is doing in the financial market. So if everybody is very, very bullish on gold on the retail side, that could potentially be a bearish signal, and vice versa. If everybody is long the dollar, that could be a sell signal, etc., etc. And each one of these things in its solo view can be an important indicator, but the EdgeFinder really specializes in combining many different variables to create a full encompassing score for your favorite charts. Now within the top setups page, you have a couple options. You can select by asset. So if you're somebody who is very specifically interested in gold or the NASDAQ, or you'd like to select a few of your favorites, you can do so here. I mentioned earlier that the category selection will allow you to select charts that you are most interested in. If you're somebody, for example, that only really cares about major currency pairs, you can select the only major currency pairs option. Maybe you're only interested in indices, or you have a combination of indices and metals. You can build your watch list with a few clicks. Finally, you can filter by things that are neutral, very bullish, very bearish, bullish, and bearish. And this is a nice tool because then you can basically filter all of the different ideas. So if I uncheck everything, you can see we get a pretty big list here. But with this, if I take out the neutral readings here, you can see now that we've got a nice watch list that is concise. And that gets me on to my next point. Our next chapter is how to use the top setups page to your advantage. And again, I've started with this page because it is, from a high level perspective, the most important page that I use every single day in my trading, and thousands of other traders around the world are doing as well. The top setups page basically creates a daily watch list for me in my own trading. Now, what that means is that each day I go to the top setups page and I usually do this exact filter. Personally, I do also like to take out minor currency pairs because I don't personally trade them, but everything else is potentially fair game. And now you can see with a few clicks, I've got my current watch list in the financial markets, and the software is algorithmically doing a bit of a pulse check on all of these different columns: the commitment of traders data, GDP statistics, inflation readings like CPI or NFP reports. This thing is tracking all of it and generating a bias for me. And what you can see here is that now my list has been filtered down to just 8 different charts on the left that have a bias that I could potentially go to look for trade setups on. So let's just take an example. We're currently getting a bullish or a very bearish reading on the Dow Jones. Now I want to parse this out for a second. Anything above a 5 gets a bullish reading. Anything below a -5 gets a bearish reading. And what that means is that when we tally up all of the different scores in the individual row, the total score here comes out over here, and if it is above certain thresholds or below certain thresholds, we get different bias readings. So again, I mentioned that the Dow Jones is getting a very bullish reading. If you're looking at gold, it is getting a bearish reading because it has a -5 score. So back to how I would use this on my daily analysis, let's just say that I'm looking at the Dow Jones and I see that we have a bias of very bullish. With a +10 score, that means that many of our different contributing tools here are indicating a potential continuation to the upside for the Dow Jones. Now, that does not guarantee that anything is going to do anything, right? The markets are a difficult thing to predict. What we're trying to do here with software is make an educated guess using these indicators where the chart may go next. Then what we do is, once we have a very bullish or bearish or very bearish reading, we then may go check on the charts ourselves to see if there is a trading setup. So let's just say I now go look at the Dow Jones and I see that charts are moving like this and pulling back. For me personally, this would be a very classic trading setup, the break and retest trade, where I've got resistance that's broken out, and I can then look for potential to trade in the direction of the EdgeFinder's very bullish reading. Now, how you choose to use the EdgeFinder with your own trading is completely up to you. The software itself is a scanning tool that helps traders spot potential opportunities, but ultimately it does not tell you exactly when and how much to risk on your trades. And of course, it is not financial advice. It is a tool meant to help scan the markets and basically give you insights on what is happening in the fundamental story or the sentiment story or the technical story to get a better pulse check on the markets. So back to our Dow Jones example. From there, I use my own personal trading strategy, which I've made many videos on. Basically, I'm looking for breaks and retests, and I'm looking to trail stops on higher highs and higher lows, just basically following the market. That we'll save for a different video, but today, again, we are talking about how to actually use the EdgeFinder to spot these opportunities in the markets. And I started out this video very intently showing you my personal long-term trading results so that you know that this is something I really do. This is something I'm really putting hard-earned money on because I don't want to waste your time. The software that we've built here is the cumulative work of myself and my team over the last few years to try and perfect a algorithm that helps us spot potential opportunities in the markets. In this next chapter of the video, we're going to be discussing the commitment of traders data in the EdgeFinder, as well as how it actually scores the commitment of traders data into its final top setup score. Before we continue on with this video, let me also mention that if you're somebody who is very serious about the EdgeFinder and would like to get a copy, we're going to be leaving information down below in the description on how you can get discounted access to this tool. All of the information can be found in the description, so whether you choose to come back to that at a later point in the video, or if you'd like to pause now and go ahead and get in contact with our team, or go ahead and get your copy down below, all the information will be in the description. I just wanted to let you know before we push on, as this video will be very long. So under the Sentiment and Positioning tab, I've opened it up and selected the commitment of traders data in case you'd like to look at this for yourself. So now what we can see here is that we have a lot of different bright colors, blue, red, all sorts of stuff. And at first, this might be a little bit daunting, but let's discuss this in detail. The COT's net positioning section of this tool will show us the overall long relative to short positioning that institutional money, specifically non-commercials from the Commitment of Traders report, are holding. And again, that may sound like a lot, but a simpler way of saying it is basically these are smart money long versus short positions that are filed to the CFTC each week. And it could be a very useful report to get an idea of the buys and sells and positioning of institutional money. Now, scrolling left to right, what you can see here is that each different chart, for example, the NASDAQ here, has a long versus short percentage on this bar. Of course, if institutional money is very long on something, like they have been for most of 2024 on gold, and by the way, you can pause the video and go look at a chart of gold for 2024, it's just been nothing but up, up, and away. So institutional money is often on the right side of the markets, go figure. Now, taking a look at this is a very useful chart because we can just take a look at our favorite charts and say, well, hey, what is the big money doing? In the markets, the biggest player usually wins. Now, that's not always the case, but most of the time they're the smartest, they're the most intelligent investors, traders. They have the most resources, most intelligent teams behind them to make the decisions that they do. So institutional's positioning can be very useful to track and keep an eye on. Now, there is one downside that we need to discuss with the commitment of traders data, and that is that the data is reported on every Friday and it only reflects up to that Tuesday's data. Now, again, that might sound confusing the first time. Basically, every Friday we get the data update, but it only shows up to Tuesday. So there is a little bit of delay here, but before you say, oh, well, that's useless, it is still very useful from a general directional bias of what institutional money is doing, and that's why we built this second table. Now, this second table is the latest weekly COT filing. I like to think of it as the latest buys and sells, because what we can see here is that we get a latest week-to-week change on all of our favorite charts. So let's just start reading this. In this, we have a long contracts versus short contracts held, but then we have the change in long contracts, the change in short contracts, the percentage long, the percentage short, the net percentage change, the net position, open interest, and the change in open interest. This allows you to get very granular on the commitment of traders data and really break it down in its full complexity. So when we look at this, let's just take a quick example. Let's say that we're looking at the euro, right? If we look at the euro, what we can see is that they have 178,273 contracts or lots of contracts. And then we have their short contracts. We can see that the change in longs, they decreased longs, they increased shorts. That would be considered a pretty bearish example, or a bearish week over week sell, quote unquote. So what I like to look at for when I'm trading is I basically come in here and I say, well, I want to see which things that they bought the most aggressively and which things they sold the most aggressively in the latest filing. So as a current example, they bought a lot of the Australian dollar, they bought platinum, they bought SPX, or the S&P 500, the New Zealand dollar, copper, South African rand, the British pound, the Dow Jones, the Nikkei, and those are all the different things that they bought in descending order from most aggressively bought things. And then we can take a look at the other side. We could say, well, they sold things like the Russell and the NASDAQ, the Canadian dollar, silver, the US dollar, the 10-year treasury, JPY, euro, and CHF. And you'll notice that when you select each of these things on the EdgeFinder, it makes it way easier to read, so that it basically highlights the existing row that you're discussing or wanting to look closer at in its entirety. Now again, I find this to be one of my favorite tools on the EdgeFinder, and it just so happens to be one of the most popular tools that the EdgeFinder has to offer for our traders. We see traders using this page quite a bit. People love this data, and they love how well we break this down, as most places on the internet where you can try and get access to COT data, they're hard to read, they're clunky, and they're not very useful. This tool breaks it down very, very easy for you to use. It's color-coded very simply so that it's easy to understand, and it keeps things straightforward. So now the question is scoring. How do we use this stuff to generate trading ideas? At the end of the day, that is the purpose of the EdgeFinder. The EdgeFinder is meant to be a scanning software that basically assigns its own scoring to each different category. Well, let's take a really quick example. Let's say that the S&P 500, we take a look at just the S&P for the weekly filing. And we say, well, let's take a look at this in its entirety. On an overall perspective, just secularly, how does this thing look? Well, they've got about an even long to short ratio, so maybe not too much of a bias there. In fact, we might say that that's kind of neutral if we just took a look at these two columns. But that's where most traders fail to understand fully how to read the commitment of traders data. Sure, they're equal overall, but what did they do in the latest filing? They added longs and they dropped shorts. That's a pretty aggressively bullish week-to-week change. We actually see that in the net percentage change, which is a calculated field that we've built. And we can see that overall, there was a very bullish reading for the S&P 500. And it's not coincidental that if we now go back to our top setups algorithm and we look specifically at the S&P 500, you'll see that the commitment of traders data tab has a +2 on it. So you can see we've done one of many different categories here to understand how the EdgeFinder is thinking. When the EdgeFinder sees big buying or big selling, it assigns a bullish or bearish score to each of the charts that it's watching in the commitment of traders data column. And just a reminder before we move on from the commitment of traders data tab, it is very important that if you are somebody watching this video right now, that you remember that special discounts are being offered in the description down below for people who watch this video. So if you'd like to get a nice discount on the tool, find out more information, try it out, or speak with a member of our team, all of the information for that can be found down below in the description or the pinned comment. Our next chapter is the retail sentiment chapter, and this actually encompasses a few different indicators that we've built in the EdgeFinder's charts. So let's go ahead and start with maybe the most popular or most obvious one. It is the retail sentiment tab. Now, the retail sentiment tab basically is a aggregate sort of data analyzing tool that we've built that takes a look at the average positioning across different key markets based on specifically retail trading volume. So when we're talking about, whether retail traders are long or short gold, or people are long or short the euro, all of these things can be tracked within the retail sentiment data. And again, this is our best guess when it comes to Forex, for example. It's not a centralized exchange, so we don't have exact data. This is an educated guess that we've built based on various sources, brokerages, websites, etc. So yeah, anyways, when we're reading this, the really simple way the EdgeFinder scores this stuff is readings above and below 60%. So let me elaborate. if something, for example, has a 60% short rate, we actually take that as a positive contrarian signal. And you'll actually see our contrarian signal column here, where something in blue is deemed a little bit more of a contrarian bullish setup, and a red one is a contrarian bearish setup. Now, why is this? Well, we know that retail traders typically, they're on the wrong side of most market moves, unfortunately. And spotting opportunities where retail traders are potentially getting trapped on an extreme can actually produce some really good risk to reward trading setups. Oftentimes what you'll notice is that when something is trending very well to the upside, retail traders start to get very bearish or short. And when something is trending very well to the downside, retail traders are usually fighting the trend, trying to go long. And the reason this can be useful to us as traders is keeping an eye on basically where they're positioned. We can avoid perhaps retail trading traps and also ride those trends as many institutional traders are often doing. In fact, before we move on to other sentiment tabs, I want to show you a very cool indicator we built. We call it the Smart Money Indicator. And if we pull this up, what you'll see here is that it actually crosses the commitment of traders data, which we previously discussed, with retail positioning all in one chart for your easy access convenience. And what you'll see here is that we've got three different variables. You've got the price of the underlying asset, in this case, the Euro USD, the net COT positioning, and the net retail positioning. And this can be useful because sometimes you see some interesting divergences. For example, when institutional money is very long on something and retail traders are very short, that can sometimes be a very good bullish signal where smart money is long, retail traders are short, and the trend can persist to the upside. So I find this to be a very fun tab to play around in. You can of course select whatever charts you'd like. And when we go back to the retail positioning tab, you can of course select by category or by symbol, depending on what your preferences are. Next up in the positioning and sentiment side of things is the put to call ratio. And the put call ratio is actually one of my favorite indicators in the entire EdgeFinder. It's a little bit slept on. People don't care too much for this indicator, but let me briefly explain why this is actually one of my personal favorites. The put call ratio allows us to look at the, as you guess it, put to call ratio in the options market. And even if you don't trade options, don't tune this out because this is still very relevant. If you are watching the stock market, this is maybe specific to people who trade NASDAQ, S&P 500, the US 30 or Dow Jones, right? If you're watching these things, what you need to know is that the options market can tell you very, very interesting details about retail positioning or just general market sentiment. Now, the put call ratio is pretty easy to read. When this line is going up, it means that the demand for puts is very high. When this chart is going down, the demand for calls is rising. And when it reaches these extreme levels, these can actually be very contrarian signals that can sometimes be used in your analysis to create great risk to reward trading setups. I want to show you, for example, this indicator that I actually made some very good money off of this put call ratio chart when I noticed that the put call ratio was reaching an extreme around the August 5th level. And if we go take a look at the S&P 500 chart, I actually went very long the NASDAQ and the semiconductors in ETF SMH because I saw this extreme and I liked the other fundamentals as well as the top setups algorithm gave me a bullish reading. And I'll show you what that chart looks like real quick. So remember I just mentioned that the date in question was about August 5th. And if we actually go look at that, you can actually see that the low was put in at the very same time that put to call ratio put in an extreme reading. So you can see we rounded off the bottom and proceeded to really rebound strong. So I love using the put call ratio because when it reaches these extreme levels, I can look out for contrarian signals to go long or short. And it's not the only thing I look at, as is with the entire theme of this video. You're noticing we're not looking at a single indicator, we're looking at a basket of intelligent tools that can help us make better trading decisions. The last sentiment tool that we're going to look at is the AAII Investor Sentiment Survey. This is a weekly filed report that shows investor sentiment. We've pulled this data in here so that you can get an idea of how people are feeling about the stock market. Now, again, even if you don't trade stocks, if you trade gold or you trade currencies, this can still be useful to you because it is a bit of a again, sentiment indicator. When people are feeling very bullish or very bearish, when it reaches extremes, it can produce a potential contrarian signal. And as I hover over this, you'll see it is a week-to-week filing. And what we can see here is the bullish, neutral, and bearish survey responses are populated on the screen for your convenience to use to get a better idea of what's happening in the market. And that wraps up this section for sentiment. I do want to mention that if you have questions about how the sentiment stuff works in more detail or didn't get answered in this video, you can always chat with us on our website, a1trading.com. We have some people on there on the support team who can answer your questions about the technicalities of the software. In the next chapter of this video, we're going to be taking a look specifically at the seasonality score within the EdgeFinder and what it is and how traders can take advantage of seasonality in the financial markets. So first of all, to take a look at seasonality, we're just gonna head over to this left-hand side in the navigation bar, click this open, and I like to go to the month of year trends. Once we've got this tab pulled up, what you'll see is seasonality month to month. Now, first of all, what is seasonality? Seasonality is just taking the historical average performance of a particular asset over a selected specific period of time. For example, there's all sorts of different seasonal trends. Have you ever heard the saying, for example, don't trade Mondays or don't trade Fridays or sell in May and go away? Things like that. There's all these different anecdotes or, sayings in the markets. But at the end of the day, seasonality is simply the idea that during the month of April, what happens to gold historically? On Mondays, do the S&P 500 and NASDAQ typically rise or fall? Little things like this can actually be patterns that traders can take full advantage of. And the EdgeFinder is built to take advantage specifically of month-to-month seasonality in the financial markets. So what you can see here in the top section is that we've selected a symbol here, but you can select whatever you want. You want to look at the dollar or Dow Jones, Euro Aussie, Euro USD, knock yourself out, the NASDAQ, etc. For simplicity, I'm going to pull up the S&P 500. Now, the S&P 500 is the US stock market 500 index. It's the biggest Fortune 500 companies. And what we're looking at here is the average 10-year back historical performance of the S&P 500 month to month. And what you'll notice is that, for example, if we were to read the month of February, in the last 10 years, it's averaged a 0.71% gain in February. Now, that doesn't mean that every February is a positive February, but on average, we can expect, based on historical returns, an average of 0.71% per February. And we can repeat that function. If we were to take a look at September, you can see that we have a negative expectancy during that month, and so on and so forth. November being the obvious kind of big swing month to the upside, historically speaking, for the S&P 500, followed by that fabled Santa Claus rally in December. Now, the EdgeFinder scoring on this is actually very simple. All we say basically is that if the month, let's say we're in the month of August, for example, is a positive one, assign a positive score to that particular asset's seasonality score, which ultimately factors into the top setups algorithm at the end of the day. So the EdgeFinder is calculating automatically for each one of these symbols a unique seasonality score. And when we head back to the top setups algorithm, what we can see here is that each of our favorite assets have seasonality scores that are, of course, impacting the total final score, again, for each asset. Within the EdgeFinder, we do also have week of the year trends, which can be fun, showing particular weeks of the year and their typical performances. And again, with this one, you can select whichever chart you'd like. Now, I've got to say, seasonality is not actually a crowd favorite, but on the EdgeFinder, it is one of my favorite tools that the EdgeFinder has to offer. A lot of traders go after some of the shiny, fancy stuff, but I find seasonality to be simple, refreshing, and something that I can add very quickly to my trading analysis to improve my probabilities in the financial markets. And just a reminder as we go through this video, at the end of the day, what is the purpose of the EdgeFinder? Well, it's in the name. It's to help you find edges in the market through market data. The next part of this video will be focusing on the trend category within the EdgeFinder's top setups algorithm. So for this category, we keep things really simple. We use a collection of moving averages on all of your favorite assets, and we basically just say if moving averages are all aligned, give it a stronger bullish signal. Or bearish signal if it's in the reverse order, if it's in the downside trending, picture on your chart a simple moving average. In fact, for your convenience, I'll pull one up. So for the trend filter, just visualize something like this, where we've added a bunch of moving averages, and when they are all lined up, it is a more strongly bullish asset. On the daily chart is what we are using for this category. And when it is reversed, of course, the opposite effect. And when they're jumbled, you might get more of a neutral reading. If you'd like to go through the unique specific moving averages and all of that in more detail, you can find information on our website, a1trading.com/edgefinder-tour. Okay, so if you've made it this far in the video, then congratulations, you've made it past a big chunk of the EdgeFinder that most traders love and are the most easily approachable components to the EdgeFinder. Now we are going to start deep diving into what I think is the EdgeFinder's cutting edge best components, but are not necessarily as exciting as things like commitment of traders data, seasonality, retail positioning, etc. Our first category is going to be taking a look at GDP and what this scoring does to the EdgeFinder. Specifically, this means the gross domestic product, and it is basically the output of each economy. Now, as you can probably guess from a simple level of fundamental even with a simple level of understanding of fundamental analysis, you know that, of course, the economy and how fast it's growing is going to have impact on currencies, commodities, and of course stocks as well. So to keep this section pretty easy, we do have things parceled out. So you can head over on your navigation bar to economic growth, click this open, select GDP growth. Now that you're on GDP growth, what you'll see is you've got some really cool, fancy looking charts here. Now, there's a legend here that keeps things very simple, but all you really need to know with GDP growth is that a higher number indicates a stronger level of growth. And we're breaking GDP into its three components in the US, which is, of course, the GDP, which is delivered in three parts. It's delivered in the advanced GDP, the preliminary GDP, and the final GDP numbers. Now, these are revisions that are being made to the actual, output of the economy, as that is, as you can probably guess, a very difficult thing for governments to very accurately track. So they put out these things in sort of their first guess, the advanced GDP, preliminary GDP, which is the refined, and then the final draft, basically. And when we look at this, what we can see here is that when you have stronger GDP growth, that's certainly going to impact things. But I want you to actually narrow in, and we can zoom in here on the edit if you don't mind, Chandler. Thank you very much. If we take a look here at like this yellow dot versus this red bar, what is this actually telling us? Well, the EdgeFinder focuses very heavily when it comes to economic data on forecasts versus the actual numbers that were reported. So for example, if you see a blue bar here, what that means is that relative to forecasts like this number here, the forecast was 4.3% for that respective report. What we actually got was 4.9%. So higher / stronger beat forecast numbers. And that would be, of course, good for the underlying economy. In this case, we've selected for USD, but of course you can select whatever you'd like. On the contrary, if you get something that is red, what that means is that, of course, the yellow dot here was missed. Expectations for 5.2 were missed, and they came down to 4.9%. on a GDP growth level. And the final would be the scenario where it meets expectations as expected, and that is the white line here. So when we go take a look at GDP numbers, of course, when something is stronger for a particular economy, it will award it a higher score. When you're looking at currencies, it does take into consideration both currencies. The EdgeFinder's algorithm is pretty smart like that. It'll look at, both, in this case, CHF, it's looking at Switzerland and Japan, comparing their GDPs relative to their forecasts and giving it a positive or negative score, in this case, a +2, favoring Switzerland. And of course, that impacts currencies, commodities, everything pretty much revolves around the state of the economy of the world. Moving on from GDP, we can take a look at manufacturing PMI numbers. Under your economic growth tab here, again, we're just going to go down to manufacturing PMI numbers. And what we can see here is that, again, you can select by country. We've got a bunch of different currencies here. What you can do is you can select by each one, and this is basically the same thing. Now, first of all, what are manufacturing PMI numbers? We did an in-depth video on PMIs specifically that will pin in the top right hand of your screen right now if you'd like to go through this in more detail. But basically, we're looking at purchasing managers in the United States, manufacturing section specifically. Now, of course, also goes for other countries as well, but I'm just defaulting to US data as it is the one that most people pay the closest attention to. So when we look at manufacturing PMI data, same thing as the previous chart with GDP growth. When this is showing a higher than forecast number, it indicates that purchasing managers in the manufacturing component of the US economy have high expectations or low expectations for the economy looking forward. So this of course impacts the score. If purchasing managers are all seeing, the need to hire more people and sales expectations are looking good for the upcoming months, those are things that tell us, and it's a forward-looking indicator, by the way, that the economy that the PMI is being conducted in actually could see some strengthening. And you can see that is of course impacting the score based on where those forecasts were either beat or missed for each respective economy. We'll repeat this step for services PMI. Within the services PMI, this is the same concept except the services component or non-manufacturing components of the economy. And what we can see here is that when it is a beat or miss, that is going to ultimately impact the scores of currencies, commodities, indices, respectively. Next up, we've got retail sales, and retail sales is a pretty cool one because retail sales gives us a bit of an overview of an underlying consumer basis of an economy, which is a very important thing. If you think about all of us going out and spending money or holding back from spending money, this tells you a lot about the economy. If people feel they can go spend money at a restaurant or go to amusement parks or go see a movie or something, that's, a telling tale of where people feel the economy is at and how consumers are essentially hurting or feeling. And when feeling better, consumers have a very positive, or if they're feeling worse, negative impact on the economy. So if we see retail going out and spending a lot more money, that is a sign that there is underlying strength to the consumer. Perhaps employment levels are going to look good. Perhaps spending is going to continue to look good. And ultimately that could lead to better corporate earnings as well. Again, select your favorite chart to view each one respectively. Now I want to pause just right here before we continue and just say the beauty of the EdgeFinder is all of these things are pretty complicated data points to go map out manually. The wonderful thing about the EdgeFinder is that it's doing all the heavy lifting for you. You can select these things at your own, will, but also the EdgeFinder is already thinking through them to a degree and tallying them up positively or negatively to impact that score that you can look at each day going into your trading. Again, if you've made it into this point of the video, I just want to point out, I'm going through this stuff in depth so that we can understand it. But the beauty is that the EdgeFinder basically makes it so that when you pull up the chart for the day, you don't have to go through every single report painstakingly. You can kind of just look at these data points and get a general idea. And if you want to go inspect something in more detail, it's always there waiting for you. Next up is inflation, a very important thing because inflation dictates usually when a central bank is ready to cut or needs to raise rates. And if what I mean by rates are interest rates, right? So if interest rates are borrowing costs that are set by a central bank, those going up or down have a lot of impact on the state of the consumer, the economy, businesses, etc. That being said, inflation is usually something that central banks are watching very closely to determine whether or not they can cut, hold, or raise interest rates. And to keep this really simple, the EdgeFinder is looking at the inflation chart here for each respective economy. And the cool thing here, by the way, is you can actually add in each one and compare them just to make your analysis a little simpler. So if you want to look at inflation of Europe, UK versus US, you've got all of that selectable here on your chart. Now, the scoring of inflation is probably the most complicated scoring within the EdgeFinder's algorithm because inflation is a tricky and complex subject to try and map out. So I'm not going to be able to go in full detail in this video on how this is functioning, but if you'd like more information on how we specifically score inflation, again, head over to A1 a1trading.com/edgefinder-tour for a more, in-depth calculation behind that. But to give you a high-level overview, if inflation is cooling and in a healthy range, meaning somewhere in proximity to 2% for a respective economy, we give that a very positive signal to things like equities. And again, a rising inflation chart is considered a more bullish thing for a currency, and a falling inflation chart is considered more bearish for a currency. Again, the EdgeFinder is doing all the thinking for the most part on that subject, and it's generating bullish or bearish signals for each of the respective instruments that we watch, all automatically. Next up is labor market data, and there's a lot here, so I'm going to keep this pretty quick. The obvious one would be looking at things like NFP. Jobs numbers added relative to forecasts. If you recall, with the GDP section of this video, we discussed that when you have higher than expected or lower than expected data points to forecasts, it can move the market quite a bit. So for example, this latest jobs data at the time of recording shows that we added 254,000 jobs in the United States compared to forecasts of just 147,000. That would rightfully so be a bullish thing for the underlying economy in the US, which might be good for stocks as well as things like the dollar, where again, that is a upbeat reading in the economy. Similarly, we can think intuitively about how unemployment rate would factor into the score of the EdgeFinder. If you have unemployment rate falling, that is generally showing strength in the economy. Why? Well, let's think about it. Unemployment rate is people filing for unemployment, not able to get jobs, so on and so forth. That number rising is more concerning. That number falling is an optimism thing. And again, the EdgeFinder is automatically going through those data points for each country and giving a score here. Finally, interest rates are something that we calculate, and the easiest way to show this is actually using a technical chart. So for the interest rate section, it's relatively simple how we score it. We apply a 8-period simple moving average to the 2-year Treasury yield from the US government. And what we do here is we basically just say, if the price or the price action here of the 2-year yield is rising above the 8-day moving average, we consider that bullish or bearish for each instrument respectively. Now, this would be considered a bullish thing for the US dollar because, again, rising interest rates generally considered bullish for the underlying currency. And of course, if we see the opposite, we consider that to be bearish for the currency, for the US dollar in that case, and also would be bullish for things like gold, bullish for things like stocks, which generally like lower borrowing costs, etc. Again, we go back to the theme here. The EdgeFinder is automatically calculating a score for each underlying asset. And now in this final chapter, we'll go through some bonus round stuff with the EdgeFinder. The EdgeFinder also has its very own market heat map. You can of course also select by category here. We built our own risk gauge or fear and greed gauge, which looks at multiple different assets and charts to get an idea of whether or not risk on or risk off is prevailing. This is also visible on our risk on, risk off gauge. For currency traders, we also have a carry trade scanner, which allows traders to look at all the different central bank interest rates and the possible positive or negative swap opportunities that are in the market currently. The EdgeFinder is on a large set of data pulling scripts and softwares, and we have a full team behind the scenes dedicated to keeping this thing up to date, working, and again, constantly being maintained. We also offer a separate service called the EdgeFinder Smart Alerts, which allows you to get notified when new data points change scores dramatically, the commitment of traders data changes something that's big, or a new top setup is found within the EdgeFinder. You can access this by sending us a direct message on our website. Go to a1trading.com and use the live chat feature in the bottom right. It is easy and obvious to say that within the FX and futures world, the EdgeFinder stands alone in its level of simplicity, understandability, and it has true testaments from many traders all over the world who have used this software to help them improve their trading, gain more insights on the market, get funded, find profitability, and overall add levels of trading analysis that they did not previously have. I encourage you that if you are considering getting access to the EdgeFinder, we have left some links and information down below in the description of this video to where you can pick up a copy. You can also speak directly with a member of our support team on our website, a1trading.com. In the bottom right hand, if you chat with us, we'll offer you current discounts that we have available and answer any questions you might have have about the product. Thank you for watching this video. I hope you got something out of it and enjoyed it, and I hope it added some clarity to what the EdgeFinder is and how you can use it to maximum success. Thanks for watching this video, and on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.